What's up everyone and welcome to Jayconomics. My name is Jay and it's a pleasure to meet all of you. On this channel, we take a look at anything related to finance with a strong focus on investing. So if that sounds like something you want to be a part of, then please consider subscribing and liking this video to help me on my quest to befriend the big, bad YouTube algorithm. The stock market is tanking and lots of gains are turning into losses for a lot of people. Should you sell, hold, buy the dip? What should you do right now? We're going to go through all of that and more in this video, but before we get into it, anyone who isn't currently part of the Smart Money Squad on our Discord server, you should go join right now. Lots of good dialogue and content in there. The link is in the description below. So make that thumbs up turn blue and subscribe if you're new. It really does help the channel grow. And now without further ado, let's get into the video. Hello everyone, and thank you for joining me for another episode of Jayconomics. So 3 out of the 5 days this past week were absolute bloodbaths in the stock market. Regardless of where you looked, it was a sea of red. This year has brought many new retail investors to the market, and many of you watching are new to this. Since the crash in March, we've seen stocks pretty much only go up and up and up. This is not how the market works. A lot of investors turn gamblers, and the entire market has now turned into a lottery that, would simply print winners, essentially. As Warren Buffett said, be greedy when others are fearful and be fearful when others are greedy. Even I fell into this trap with Hyliion, being up $9,000 at one point and surrounded by an echo chamber of people saying this was going to $80, $100, just based on pure hype and one catalyst. I broke my own rule, and I was greedy when everybody else was greedy, and I got burned. My $9,000 of profit evaporated very quickly when I should have just been fearful due to everyone else being greedy. So this kind of got me back to my investing principles and really woke me up. And so a few of my other speculative stocks, I actually sold a chunk of my positions at large gains just to lock in those profits and to basically just play with house money. Now, a few of these examples were my Lordstown Motors and Open Door warrants, Workhorse, Fastly, and CleanSpark stock when they had run up way too high, way too quickly for no apparent reason, in my opinion. So I sold enough of these positions to not only cover my initial cost, but also at least 10% profit on each of these. And so whatever I have left is pure house money plus the 10% profit that I made, and those I will keep for the long term. So the reality right now is that the market is in a major correction, and I am sitting on a lot of cash from those strategic sales to either buy in again to those same stocks at a much lower price, or different stocks if I so choose. Now, long term, this is an important concept. It seems as though long-term investors are going extinct. Now, if a stock doesn't go up within a week or two, there's something wrong and it's a POS stock, pardon my expression. When stocks have run so much purely on hype and excitement and are currently extremely overvalued for where the business is at currently, you get rather disconnected. Now, every investment that I do make, including the stocks that I just mentioned to have sold, are companies that I do believe in long term, and that thesis has not changed. Now, those of you who have followed my channel since day one know that I invest with a long-term vision and hopes for short-term gains. But if those short-term gains do not materialize, that makes no difference to me as a long-term investor. Now, as investors, we need to learn patience and we need to learn to take emotions out of our investing. The stock market is a device which transfers wealth from the impatient to the patient. So remember that when you are busy being fearful and impatient and selling a stock at a loss, for example, a patient and greedy investor is buying those shares from you and is going to enjoy those profits. So this concept is all mindset, right? And this mindset takes time and experience to build. but it is necessary if you want to be a successful stock picker in the future. Now let's talk about why the market saw its worst week since March. The first reason why the stock market is dropping so much is because of the lack of stimulus, of course. For a while, we knew that the market was running on stimulus, and now without an agreement in place for a new one, we're seeing the repercussions. A new stimulus bill will most likely be passed once the election has passed, so this will likely drive the market higher. But until then, and we don't know when it's going to be, it may be tough sledding in the short term, regardless of who gets elected. But more importantly, the American population is in need right now, and regardless of what side you support, or if you even care, Congress needs to get this done. It's sad how the stimulus, and the illness for that matter, have both become so politicized. The American people need you. Get your ish together. So clearly, November 3rd is a big day. Now, if Biden wins, another lockdown is not out of the question, whereas Trump has stated that another lockdown will not take place under his leadership. So, a lockdown equals detrimental to the economy. Another thing to keep in mind is that Biden is planning large tax increases if elected. He says that the increases would just be for high earners, but his proposals would end up negatively affecting everyone by extension. Biden's camp is proposing to hike the top capital gains tax rate from 23.8% to 43.4%. This would be insanity, and it would cause a lot of problems. A capital gains tax increase would be hurtful to high-growth companies. How so? Well, the reward that angel investors receive for putting their time and money into startups is a capital gain 5 or more years later, and so if we raise these capital gains taxes, then consequently, angel investors would most likely move their money into safer investments as the risk would outweigh the reward. This would likely not bode well for innovation and technology. Now, although polls show that Biden's going to win, polls were extremely wrong in 2016, but most people still believe those same polls. So if I put 2 and 2 together, it tells me that a lot of people are believing that Biden's going to win the presidency, and by extension, they're pulling out of the market because of either A, uncertainty, or B, the Biden presidency tax rates, right? I mean, it would be smart to take your profits now. Of course, the illness is another reason. There are more cases daily, and France, Germany, and the UK are in nationwide lockdowns, with France just announcing today that they're banning sales of non-essential items as of Tuesday. This is insane. Now, a lot of people are not afraid of the illness, but a lot of people are. And so regardless of whether this is due to more testing or not, this will not give the market confidence, which, added to the political uncertainty, the fact that we have no stimulus bill, and you have yourself a recipe for potential disaster in the market. This past week, it finally caught up and we saw 3 really massive red days. Now we can see if we continue that red trend this week, or we kind of recover a little bit after Tuesday. Now, all of this is true, and we may very well be in for a rough few months regardless of who is elected. Since the illness has taken over, there have been companies who have clearly benefited from this. The big tech giants have been a part of this, of course, but as we saw last week, when they reported very solid earnings, the stocks for these companies either still fell or didn't have a significant move up. The only notable exception was Google. Now, with tech stocks running wild this year, it seems as though positive earnings were already priced into the company's valuation. But clearly, people are taking profits and getting out of the market due to the uncertainty looming. So bottom line, what I really want you to take from this video is this: stocks will go up or down over the years depending on how the business fares over the long term. So, regardless of what is happening around you in the short term, you need to ignore the noise. If you are invested in a solid business that you believe in and understand, then you don't need to worry about the short-term price action, and you can refrain from being emotional. Choose companies that you like long-term and hope for short-term gains. If these stocks get way too ahead of themselves based on nothing else other than hype, then it could be very well worth considering selling a portion of your position for a little bit of profits and to get your initial investment back. Keeping cash on the sideline for the next opportunity that comes your way, and even potentially buying back into those same stocks if it comes back down to earth. So, that wraps it up for today's episode. I hope you guys enjoyed this video. Let me know in the comments below what your thoughts are on the market right now. And guys, if this video brought you some value, then please smash that like button for me, as it really does help the channel a lot. And if you want more content like this, then don't forget to subscribe and turn on that notification bell to be notified when any new video comes out. And of course, please feel free to join the Smart Money Squad Discord server. The link is in the description below. And until next time, take care and invest smart.